Okay, cool. So, Jason, welcome to the Wharton FinTech Podcast. I am thrilled to have you here in Philly for one of our first back in real life recordings. How are you? How's it been to be here?
I'm great, and this is actually my first time ever in Philly, so what a cool thing to be able to do and be in the city again, like in the middle of how crazy the world's been the last 18 months.
Yeah, I hear you, and I'm with you. Well, I feel particularly honored to be recording with you this week because, if I'm not mistaken, it's Altruist's third birthday. Is that right?
Yeah, actually, yeah. So yesterday, there's a little debate, like internally, like when was our first day, but since I think I was the one who started the company, I'm pretty sure I'm declaring September 15 as our launch day. So, and yeah, 3 years ago, 2018, September 15 was kind of the start of it all.
There you go. I think if being the founder gives you anything, it's definitely the right to have final say on the birthday. So I hope that means that we're also catching you at a particularly reflective time, and that this episode can serve as sort of a time capsule for Altruist as we look back for the years to come and sort of hear about this stage of your journey. So you've had a really interesting career path leading up until Altruist. So I would love to dive into that a little bit more because, you know, you've had so many different takes on the retirement and wealth management spaces from a couple different angles. And I think, to use your words, you've gotten more efficient at it along the way. So how does a guy from small town Michigan become a serial financial services entrepreneur? How did you do that? What are the major inflection points? What sort of sticks out?
Sure. So a favorite to unpack, but I would say a very reflecting kind of time. I spent like 5.5 hours on the airplane actually really thinking a lot about like, wow, like these 3 years, but it actually took me then like back 17, 18 years when I started my first sort of wealth management practice. Like going even further back, I think I'll keep it short, but like some really, really important things like for me early in my life were like I had the most unbelievably supportive mother like a kid could ever have. I'm kind of like emotional about it because I'm expecting a child in the next month myself.
That's
and
amazing.
I'm thinking about like, you know, how do you instill like this belief in a young person that they can do anything in the world they want, right? But my mom had that like
Unconditional love.
Yeah, well, and genuinely like if I was like, yeah, I'm gonna, be an astronaut, as cliche as that sounds, like she would be like, absolutely, you'd be the best astronaut ever. Like, let's like go read some books on like becoming an astronaut. So way back, the very earliest parts of my life that I can remember, I had like incredibly supportive people. And then like the era that I grew up in was kind of a fun era. I finished high school and went to college in the late 90s during like the first really big sort of tech boom. Back then,
of course.
It's funny, we didn't call it tech, we called it the .com. Like ages me a bit.
What is this internet thing?
It's really weird, like that you can interact with people all over the world in real time. So, but it was a really exciting time because it connected the world and in a way that had never been done, and it made people from small towns in West Michigan like start to think very differently than what you'd think if you just saw what you could see sort of localized. And that gave me like these really big visions of having like a massive, again, .com, which I guess today we call a tech company, like that I could do something that would make like this bigger impact than I could ever make like being in a little farm town in West Michigan. So that's kind of like the setting the stage stuff. A lot of serendipitous things. I'll say that I was very lucky on a lot of levels to have met some of the right people at the right times, get certain opportunities and doors open, but and getting into like wealth management, total accident. I was a computer science kid, like, that happened to sort of come of age when that .com like boom like eventually burst. So history lesson for those who didn't pay close attention to that era. As exciting as the late 90s were, the early 2000s were pretty miserable. There was a gnarly recession, and a lot of these .coms became like, like kind of like puns, for like the excess of that era. But if you had like those same skills, right, like a lot of the computer science, mathematics skills, those were very transferable into finance, which actually had a very, kind of bright time, especially people trying to get away from like the investment banking boom tied to .com and get into like more traditional things like asset management, wealth management, and so forth. So that's how I got there.
Broadly applicable, yeah.
Yeah.
So you've been manifesting for a long time.
I mean, something like that. Very accidental. You look back now and it's like, seems like it all makes sense, but I can assure you that when I was like 22 years old, I had absolutely no idea what I was doing, but it was very ambitious, and the timing was good to start to go do important big things.
Yeah, I mean, you said it really well, that it seems like it's all connected now. And when I was, looking into your background, there seems to be a number of underlying threads throughout, and your focus on sort of the financial advisor space seems to have rung true. So talk about getting into that business in the early days. Sort of how is it, remarkably different now, and how is it still exactly the same?
Yeah. So my first exposure was I was. I don't know, like this is true, right? We have to do some fact checking, even for myself. But I remember the people who hired me at Morgan Stanley said I was their youngest employee in the world at the time. They had about 50,000 employees, and I was 19. So I think there's a good chance that's true, but who knows? But I got started at a really young age, and my first exposure to like capital markets was essentially that the things I was brought in to work on, and a lot of the people that I met. Who were incredibly bright. I learned so many things from, but most of our work was actually for extremely wealthy people or for proprietary capital, so like the actual firm's money. And I couldn't help but pretty quickly, start to think about where I was from and going, there's no way anybody that I had ever met in my life up to that point, would ever have access to that kind of wealth management,
right.
And even investment management. Like, it was just not accessible. And so, it didn't take me long to start thinking about like how could I take some of these experiences, which I felt really privileged and very lucky to have, and do work that could more broadly impact like normal people that were like the people I grew up with, family, friends, and people that didn't have $20 million, for example, which was a pretty common minimum for some of the higher net worth practices in both asset management and wealth management. So I very much appreciated my time at Morgan. It was an incredible place to learn. Can't think of actually a better spot for me at that time now in hindsight. But it made me think about, how disadvantaged most people were when it came to money. And now, again, you look back and I kind of see like that wealth gap has gotten wider and wider to this day. Like I don't think there's been really any meaningful improvement in terms of taking those who have very little and helping them achieve more. Instead, it's been like, again, the sort of cliche thing, rich get richer. So I've spent like the last now 17, 18 years starting different ventures, all really like that was the common thread, was like I was really frustrated with the fact that there wasn't more accessibility to great advice. And each kind of venture along the way, I was learning how to be more impactful there. And the very first business I started on my own, I was 22, and it was like a website that allowed people with a 401k to answer a couple questions about like their risk and their like goals, and then where they worked, so I could understand what their investment options were, and then the system would automatically recommend a 401k allocation. Right? So that was my first foray, and it was really like a great learning experience, because I thought it was all about if I could build a sort of a quantitative asset management system, like that was the secret sauce. If everyone had that, the whole world would be like better off.
Right.
But I learned that there's like a really big disconnect between like the
adoption
average person with a 401k and like understanding a black box that manages their money. And there was just tons of things too, like how do you build a website? Like I was pretty good on a computer, but I didn't build front-end websites, and I didn't know anything about like search engine optimization. And back then, this was like before Google was really even a very big company. So people kind of forget that like paid advertising and all the things that today a lot of tech companies do, this was before a lot of this was commonly done, or the knowledge of how to do it was there. So I had to learn a lot of like things very early on, and like just how to get people's attention to sign up for the service. But it actually worked out really well. Like I got, thousands of people like from all over the country coming through the internet, like to say, hey, I've got this 401k and I need some help with it. And while that was really a great experience, I also learned what like customer churn was. So that was my first experience with that, which was most of these customers after 7 or 8 months, they didn't want to pay a monthly subscription. Even if it was like $20 a month, it was sort of like, okay, like you told me what to do once, and like my monthly email the last 7 months has been, don't change anything. Right. And it's weird how human behavior was like, they wanted someone to tell them like they had like work to do every month or something when really this
Right.
thing wasn't.
And you were just trying to make it as simple as possible.
So that was like, how I got into it, and then it's been a bunch of stuff since then.
Right. But it's interesting because at that phase, it was direct to consumer mainly, but you've spent a ton of time now on sort of the B2B side. So talk about why maybe you've pursued sort of the latter in the more recent years and sort of what you think the advantages are there.
Sure, yeah. So the 401k advice website was a cool experience, but what I found is when customers would churn out, I'd ask them why, and almost always it was, look, if you just did this for me, like I would pay you even more money, but like I don't have the 5 minutes a month to like read this email and implement any changes if there were any that were suggested. And so that's what made me think, well, what if I just became a financial planner and I just worked with these people? So at the time, there wasn't a lot of information around like how do you even start a financial planning company. I knew that I didn't really want to work for anyone at that time, so I had gotten sort of addicted to being an entrepreneur from that first venture. But it was quite a journey. It was 2004 when I finally registered my first what's called a registered investment advisor. Back then there were only a few thousand in the entire country. It wasn't that common, right? There might have been 1 million financial people, but very few, again, a few thousand that were in this like RIA universe. But I chose that because after doing research, I felt like this is the future. Like, this is where your advisor has a fiduciary obligation to work in their client's best interest. They don't work for a big company, they just work for their clients. And it also, it very much fit my ideals around entrepreneurship. Like it was designed for people to start and launch their own, at the time most of them were small, very small businesses, like solopreneurs, so to speak. And so it was a really good learning experience. I actually worked directly with clients for a number of years, met people from all over the country. Before like Zoom existed, I was using like Skype back in the day, to like to communicate with clients. It was a really cool kind of era. And as valuable as it was to work with clients, I realized that my ability to even like leveraging technology and having a virtual practice, which again this was before many people had virtual service businesses. There was a scale limitation, like working directly with consumers, and ironically, like around the time that I pivoted out of like direct to consumer is when a lot of what today people call robo-advisors were just getting started.
Right.
And I looked at those businesses and I was like, boy, they're going to learn the hard way that customer acquisition is really expensive, and it's going to take a lot longer to achieve scale than they think. It's going to be a lot more expensive to achieve scale, and so I'm going to choose to go B to B to C. Right? So right around 2010 is when I made the decision that it would be a lot easier if I could work with like an already existing sort of like infrastructure of advisors and just arm them with better tools so they could serve more people. It's a very basic kind of like marketplace kind of concept. Instead of like one person driving their car around town as a taxi driver, you build a platform, right, that allows thousands of drivers to drive their car, and that's obviously called Uber or Lyft nowadays. But we needed something like that for financial advisors, where there was a sort of a technologically driven solution so that they could serve maybe 10x the number of customers. And if we could like make it easy for the clients, for individual people to find those advisors. So the vision anyway was by doing that we would be able to grow a lot faster, help a lot more people, a lot more efficiently. And it turns out I was right. It worked. I built a company from scratch, bootstrapped it with very little. I never had outside capital, just my own money, and built it to a rather significant, at least to me, significant company. Although it stayed under the radar because I didn't ever take outside funding. And in many ways, I look at like that timing, and what I built was actually bigger than most of the like well-known consumer robo-advisors. But it stayed again sort of very much unknown, which is
and that's Formula Folios.
Correct. Yeah, it's a company called Formula Folios. Silly name. I'm not like always so good at naming names. I like to think my current company Altruist is a cool name.
Very
Last
cool
company,
name.
A little bit of a tongue twister. But the idea was really simple. Like it was all about what if we could apply basic formulas to help people manage their portfolio and sort of automate good behavior. That was the idea, right? So that's how the name came about. And then we worked with independent financial advisors all around the country and had, hundreds of them working with, almost 100,000 clients now. So it's really cool to see like that network effect and how efficient it was. The total capital invested was $100,000, right? So you think about capital efficiency. That's like a week, for a
Right.
lot of the direct-to-consumer brands, and that was
Right.
all we ever spent.
On one marketing channel.
Yeah, 6 years, yeah. So it was very efficient. I'd say like for anyone who's thinking like, do they go B2B or B2C? Just know like that there's going to be certain amount of capital efficiency or inefficiency with my business anyway, like this B2B2C model is a lot more efficient.
Yeah, no, I think it's a recurring theme that we keep hearing about the force multiplier that you can sort of be on the B2B side. We had Stephanie Kirkpatrick of Orem come on and say something really similar. She had an impact orientation and was deciding sort of between that fork in the road of do I go direct to consumer or B2B, and similarly thought that she could just scale the impact, a lot in the same way. So I heard in a previous interview when you were talking about Formula Folios, you said something really interesting that stuck with me, which was you needed to spend those 10 years on that company to be ready to build Altruist. So what did you mean by that? And what did you mean by that? And also, when did you know you were finally ready to start Altruist if you needed that sort of time?
Yeah, so I think the nerd speak on a company like Formula Folios is that I built all of the technology, or our team built all the technology, sort of nesting on the existing infrastructure of the industry. So, and that existing infrastructure was like the existing custodians and clearing firms and asset management providers. And even to some degree, other fintech companies that had pretty antiquated architecture and how they operated. So we had a lot of limiting factors. There's tons of friction. It didn't matter how well we built our systems. If we were still relying, for example, on a custodian that required paper, physical paper to open an account or to send a distribution to a client, these are really core basic enemies of scale. You cannot brute force your way through that type of inefficiency. And so the thing that you start to realize is your costs. You have this vision, at least I did, where I thought, well, once we get past $1 billion, then we'll have some real scale. It didn't come at $1 billion. $2 billion will have real scale. It didn't come at $2. $5 billion there'll be real scale. There's not any scale achieved at $5 billion in the wealth management space. So contrary to what people might think. And when I say by real scale, meaning your cost of goods sold and your core operating expenses are just going to be a certain amount. And it's going to make your end product, right, that you're giving to a customer pretty expensive.
Right.
And on top of that, it's a crappy experience. You're dealing with a really disconnected sort of experience of opening accounts, funding accounts, trading accounts. Even servicing clients with their needs, you're dealing with so many different parties, whether it be tech vendors or again kind of clearing custody type vendors. And so I needed 5 years of smashing my head against the wall trying to fix
on all of those individual puzzle pieces. Yeah.
Until I finally was someone has to fix this at the infrastructure layer. That's the real challenge. And it's also the biggest opportunity. And it's partly why no one had ever done it before. Going into a market and saying, okay, there's basically today 2 primary companies. When we started Altruist, there was 3 that offer the core kind of infrastructure, the custody layer for financial advisors. They have 80+% market share, and both those 2 companies are $100 billion plus companies, right? So that's
taking on giants.
Yeah, right. This is not normally you don't hey, 2 kids in a garage at Stanford are solving that's not, you can't go to war like that. You're going to fail really, really miserably. So I knew that there was this huge opportunity to do something really impactful, but it was going to be a ton of work, and I needed some conditioning. One, to get so frustrated that I was willing to go take the risk and do it, but also had to just better understand all the intricate details of all these disconnected pieces and how they would work best together. And that's what started in September of 2018 with Altruist.
There you go. So perfect segue. With much anticipation, I want to get to the root of the topic today, which is Altruist. So can you just give us the 1-minute elevator pitch on why Altruist exists and who ultimately you're serving?
Yeah, the super short version is that right now it's really hard to get access to a financial advisor, a good one. So the vast majority of people, right, we've got 100 million plus people that do not have a financial advisor in the United States. And most of them don't have access largely because either they don't have enough money to qualify for one, or they don't even know where to find one, which is really sad. And so with Altruist, we're making financial advice a lot more accessible. We've made all those points of friction, right, that make it really hard for advisors to have scale, and really eliminated those. So advisors can serve large numbers of people with all sorts of levels of wealth really, really efficiently and easily. A lot of that technology also makes financial advisors better at their job. So sort of, by augmenting best behaviors with technology, we can ensure that the things that matter most to outcomes for investors are automatically kind of on the advisor's radar so they can implement them very easily. And then ultimately, as we think really, really big picture, I think we'll be able to connect consumers and advisors together, right? So we haven't solved that yet. Still working on a lot of the technology, but the vision is just make advice better, more affordable, and accessible to everybody.
But you, underlying in this is that you really believe in the human element. So in this era of, robo-advisors, you're getting a lot of buzz. We've already mentioned them a little bit. What is it about? When do you think the human element is necessary, and sort of why is that, the critical point?
As soon as possible, right? We live in an era where there are people making decisions with their money based on things they hear on TikTok, which are maybe sometimes okay, but many times definitely not okay. And I pick on TikTok. It could be Instagram, it could be YouTube.
Yeah.
You pick your media.
Influencers have gone a little wild.
It's a bit bonkers, So, but I think as soon as we're able to start getting foundational financial education into our lives, the better off we're going to be long term. We had a good chat with Bill McNabb while we were in Philadelphia from Vanguard, and also a former guest here who was so lovely to make an introduction. But he made a comment, and I wanted to say, hey, Bill, I'm pretty sure I heard that from Albert Einstein, but he said, compound interest is the greatest thing, the most powerful thing in the universe. And
that's Wharton's, secondary motto. Yeah, I feel like that's all we learn here.
If we think about the value of compound, that means time matters. So as soon as we can, this idea that people should have to figure this shit out on their own, and then someday when they have money, they can go hire somebody. That's crazy. We need to get access to advice as early in people's lives as we can. This will allow people to make good choices. If you make good choices, the outcome can increase by orders of magnitude, right? And people don't always realize how big of a difference 1 or 2 or 3% makes in an additional 5 to 10 years. It is such a huge amount of impact. Anyone who's a student at Wharton, I'm sure can do that probably on the back of their hand or their head. But it's for many people, millions of dollars of difference in their lives if they just get, again, that little extra compound return and that extra time. So as soon as possible is the short answer. And then in terms of are there other tools that are great? Absolutely. Some people, I think, will find that doing some things on their own is a great way for them to learn some foundational knowledge. But if you can, I have a son who's a college student myself, and it's crazy. He reached out to me this week and he goes, hey, Dad, can I get an hour on your calendar to talk about crypto? I want to start trading on Coinbase. And I'm like, son, absolutely. Let's get a 5-hour session.
Yeah, let's not limit ourselves.
Yeah, I feel like that's a really important thing for us to have a conversation on, right? But so these conversations are coming up sooner, and people don't have everyone doesn't have a dad that runs a fintech company that they can call on and ask for an hour or more or whatever of their time. So it's really important that people have a degree of comfort and confidence to know, hey, I can go to this place, get access to people that are highly relatable and can give me kind of sort of these nudges in the right direction. So I don't make really bad choices, learn the hard way, waste 5 to 10 years, and have a really hard time letting compounding work in their favor.
Right. So you believe in the financial advisor as that sort of gatekeeper, a filterer, a confidant, someone you can trust.
Yeah, I think so. So first I should say, not all financial advisors are all that good. There's plenty of...
That's abundantly clear on your website.
Yeah.
I think that you make that comment a couple times.
If anyone's had that friend, that graduates from college and then wants to sell you some insurance, when you're 22 years old, that's a great example of how not to do financial services young. Unless you have a really good need, but I'm going to say most 22-year-old or 24-year-old college grads are probably not in need of a whole life insurance policy right out of the gates. But that aside, good financial advice, that is an incredible cheat code for achieving a lot in life, whether it's financial flexibility, freedom, ability to help family, your community. And so access to good advice is what matters. Now, is it humans always that deliver good advice? Not always. Again, some of them don't. So if we can help empower sort of the best advisors, that's why we still, to this day, Altruist only works for registered investment advisors. That same sort of epiphany I had in 2004, that this just feels right. This feels like where I would want to get help. This is where I would want my parents to go get help. This is where I'd want my friends to go get help with their money. So how do we take this ecosystem of advisors and help it grow? Today there's around 35,000 of those firms, about 100 or so thousand people that work at those firms. So it's grown a lot in the last 15 years, but it needs to grow a lot more. We could use hundreds of thousands of these like unique kind of firms that can serve clients with all sorts of very unique, like very, in many cases, highly individualized, very specific life kind of questions, financial questions that you can't codify, right? Like you can't, like I know this because I've done this before, where you've like trying to write like these algorithms that automatically provide highly personalized advice, and like there's like a point at which I think at the SALT conference, I can't remember who said this, but it said something that like the most advanced version of AI, I wouldn't have used what they said, I think it was like kind of like not super politically correct, but was still not very smart, basically.
Right.
And so if we think that there's no value in like a human being able to, with technology, deliver this like really unique personalized advice, like I think we're fooling ourselves. Like technology can do a lot of great things, but if we have, which we all do, like really unique personal things that are happening in our lives that sometimes you just need someone to talk to, and a chatbot is not the solution.
Right.
Like having that human can really help. Now that human needs to have incredible technology.
Yeah, and
a
scale.
ton of skill. Yeah. So that they can then implement that advice at scale really efficiently, right? Really low cost, so that the customer can actually achieve more with their money.
Right.
But it's that marriage, that it's sort of like very much like augmented human relationship with great technology that has the biggest influence to help like people with real problems,
right?
Not just like archetypes, right? Which is what happens when you deal with computers.
Yeah, no, I mean, I think that's why they call it personal finance, because it is
totally
just that. It's very personal. So you're targeting these RIAs, these registered investment advisors, and bringing it back to Altruist, talk to us about, I'm an RIA, but I'm not a current Altruist user.
You're crazy.
Yeah, I'm clearly in the wrong, but also what is the infrastructure and the service partners that I need to get started? What are the critical components? Where are you going to get those if not at Altruist? And I know the custodian's a big component of that, so maybe you could double click into that too.
Yeah, so if we think about like most advice relationships start off as just advice, so it doesn't have a whole lot to do with money initially. It's just an advisor getting to know and understand their client, what they're trying to accomplish with their lives, and in some degrees like taking inventory of like, well, where are you right now relative to where you want to be? So starting there, it's a pretty crappy experience. Like if someone has never done this, like worked with a financial advisor, I think most would agree that it's a really, it feels really outdated. Like it's usually like reams of paper. At best case scenario, like there's advisors that I think they think they're being technologically savvy by offering things like type form, like, hey, use this type form. Like that's a really bad idea to fill out all of your information, with me, and so I can do a plan for you. But so there's a lot of opportunities to just start the relationship in a way that's like more secure, allows both information and financial information and like personal values like to be shared in a digital manner. This will allow advisors to do better work because they have access to the right information as early as they can. Now, as far as like the things that Altruist is really focused on, it's removing like these frictional barriers of onboarding new clients. So it could be like whether it's like data intake, opening of accounts, funding of accounts. These are things that until we came around, really there was very few digital solutions. And the digital solutions were more like DocuSign, which is a pretty crappy experience in finance most of the time. And so how could we create an experience that feels a lot more like if anyone's opened an account on any leading like personal finance app, so if it's Coinbase, it's Robinhood, it's Betterment, whomever, these experiences are fast, they're easy, pull out your phone, in minutes your accounts are open. With advisors, it could be like hours of doing paperwork, and like they still use those little stickies that you put on the like sign here.
Oh no.
And sometimes they forget the spots, right? And you have to send the paperwork back with FedEx envelopes and stuff. I mean, so it sounds really silly, but like there's a lot of like really basic things that those were the first things we had to tackle. Like how can we make it incredibly easy for an advisor to work just onboarding, like working with new clients. Once they have a client, then there's like implementing of their advice, right? So that planning work and the things that the human can do better oftentimes with the assistance of technology than they could without it, has to then be implemented. So this is where you fund your accounts, whether it's linking to a bank. And again, if we're, a lot of young people are so used to it that they forget that, like,
that
a lot
was
of
once
times
hard.
their parents and others, like, they have never used the Plaid, API to connect their bank to something. They've never used, something like, Cash App or Venmo, right, to easily send money. So a big chunk of people are still living in a world where, like, they write physical checks and they keep the ledger. And, it's a very strange kind of, world, but that's actually how it is mostly in the United States. So we're trying to make that, again, like, heavily digitize it, but make it super user-friendly and also designed for B2B2C. So it's easy for the advisor to assist whenever you need that human element. You're not just trying to figure it out on your phone with no real human help. And then the actual investing, right? Like, investing, only recently did custodians that worked with financial advisors eliminate things like commissions. Commissions have been a really bad idea for a long time, but it used to be that, you pay $7 or $10 per trade. And that was only a mirage, right? That was to make you believe that that's what the cost was. Meanwhile, the companies are making all their money from the cash in your account, earning net interest, the payment for order flow, like selling your trades, right, to liquidity providers, selling your positions to short sellers, and making sort of a margin sort of loan rate. So, like, and I could go on, like, there's like hundreds of little kind of bizarre ways that people wouldn't maybe believe that that's how these firms make money, because the commercials would be like, trade online equities for $7. It's like, that's totally just to make you believe that's the actual cost, right? Not the cost. So, so we've tried to make sure that, like, all of those things are also super frictionless, right? Very, very low cost. We do all fractional shares, which allows people, again, at any level of wealth to get access to sophisticated asset management, whether they have $5 or $5 million or $50 million. Everything's very modular. An advisor can run their entire business, right, just on their computer, a few minutes a day, actually, so they can spend the bulk of their time doing the personal things.
With clients,
Right, versus, like, doing data entry or following up on the phone with, like, where did this check go or did this money get to there? So these are things which, again, I think foundationally don't seem all that, like, earth-shattering, but they're really important. That's why I said, like, the infrastructure layer was the first really critical layer that we had to focus on at Altruist to help advisors be able to do their best work. And the future is, like, very, like, there's so much more to do. Like, I think there are a lot of ways to use technology to make the experience much more personalized. If we think about what allows people to get better returns with their money, it's like it's a topic that could be debated. Like, are returns really important? It's like, of course returns are important. Like, we just talked about, like, how compound interest is so valuable, but compound interest at 1% a year isn't all that valuable. But compound interest between the difference between 8% and 9% is very valuable, right? So that 1% matters a lot as we sort of stack it on the natural efficiency of capital markets. So how do we help advisors deliver that extra 1%? And there's a lot of things that we can do there, most of it revolving around, like, personalizing the investment journey. Like, when people are more engaged in their own financial life, like, how do they arrive at the things that they own, they're more likely to stay committed to those. And those commitments, so that ability to sustain market ebbs and flows, is going to allow people to achieve a lot better returns. So we know this because there's hundreds of years of history, like huge, large data studies around, like, what really influences returns. And it's going to be the things like, let's minimize taxes, let's minimize, kind of poor behavior, like selling when you shouldn't and buying when you shouldn't, chasing trends and fads that really are not, like, rooted in, like, long-term viable sort of high efficacy investment standards. So a lot of, like, our work, once somebody becomes a user, is all about that. How do you make advice better, right? And we can use technology to automate a lot of really good behaviors to focus on, like, is it possible, and if so, like, how do we get that extra 1% for every single investor, no matter how little or how much they have?
So RIAs that listen to this episode will know that they should be checking out Altruist. But outside of that, how do RIAs find you? And sort of where have you seen the best, penetration so far in terms of, maybe a typical RIA profile or your target segment?
So interestingly, we've been able to develop, like, a really loyal kind of grassroots following. I think that, I certainly can go long-winded. I think I could probably do a better job of condensing our message into a very simple, like, message for advisors. But as they hear about the things like these, like, when someone is an advisor, look, they know these problems. Like, they're sitting there dealing with them every day, like, trying to connect, like, 7 different things to a tech stack, paying a whole bunch of money for software that does very little for them. and having to defend in some cases their fees because they have to charge a lot, or say clients have to have a certain minimum because they just have limited capacity. So they all know, like, it's not like hard for us to get advisors' attention because all of them are dealing with these problems. Again, I dealt with it at scale at a multi-billion-dollar firm before starting Altruist. So fortunately, we haven't had to do a lot of like sales activities or a ton of marketing activities. Once people hear about the sort of mission that we're under, like, again, an RIA by default, like, they typically have a bias to always do what's best for their clients. When they realize that there's sort of this ecosystem of tools they've been forced to use to try to deliver that what's best for my client, sort of mission, they realize like that they're fighting a losing battle. Like, they're like showing up to a whatever gunfight with a knife. Like, it doesn't work very well. So what we're doing is really allowing people to do what they've always wanted to do. It's like the easiest thing in the world actually to sell. And so we've been able to largely have advisors be the like advocates that share the message with others. So that's been super powerful. And then our message is highly relevant, I think, to like the next generation of leaders in finance. And not everybody's young. I shouldn't like pigeonhole like our users as like they're all young. They're not. We're people of all different ages, but like they're people who very much believe in the long-term positive changes that can happen in finance, and they're people who are really tired of the old ways of doing things. And I realize I'm very privileged. I'm getting old myself, so I can say this, and it's like not derogatory, but financial advice was an old white man business for a long time. And I think a lot of people are ready to see that change and make it more accessible. So there's more people who are interested in launching and building firms, and they can serve a more broad segment of clients, not just other primarily old, rich, white people or something like that, right? So the timing is really, really, I think, important for companies like Altruist to be successful. And again, the advisor community, like this is, I think, been boiling up for like a long time. It's like ready to blow, and where people are like really eager to see change, and good change, like change that's better for customers, but also change that like makes the industry a little bit, more open and inviting, to people from a lot of different backgrounds. And we make that very much possible because we don't have any minimums. Like, people can launch a firm with an idea, right? And so it's really cool to be part of that innovation, sort of innovator's dilemma, where we're eliminating part of that, right? Like that dilemma that is. So I do feel like there's a lot of reasons why we haven't had to do a lot of marketing yet. We'll see like as we go forward, but certainly like advisors have been our biggest advocates. Social media has been very powerful for us. I think most companies that scale quickly, they have to be able to do those two things, like connect at a very almost like tribe-like level with their users, and then leverage social media to reach a lot of people very quickly and very efficiently, to follow on our theme of efficiency.
There you go. Well, you talked about, maybe you don't have to necessarily do marketing, but Altruist does do a lot of really interesting things on the content side to sort of spur that activity around that community. So one of those being your Human Advisor podcast. So would love to hear a little bit more about that. I know you're on this coast because you're doing a little bit of an East Coast tour for that. So what was the genesis and sort of origin story around sharing some of those stories?
Yeah, well, thank you for bringing that up. It's obviously, everyone that's watching this can't tell, but like our whole team is right here, right? That's doing, so they're with us. But so I'll be very flattering. But the genesis was in the very early days, as I was starting to think about building out at Altruist. Sort of like the early fables not often talked about, but we. I knew I had my opinions, but like I thought, I really should talk to some advisors, but I didn't want to like just talk to the same advisors. I didn't want to talk to other people that were just like me, in other words. I wanted to talk to what I consider to be like the next generation, like great advisors. There just so happened to be, there was an article that came out in Financial Advisor magazine, and it was like something effective like, 10 advisors to watch. And so I just cold solicited all of them on LinkedIn one day. And so I'd love to talk to them. And just hear a little bit more about like, and they were really, the stories were awesome, by the way. It was like people serving underserved communities, like people that were in underrepresented groups themselves, and started a firm from scratch because there was no place necessarily for them, like within like the existing, major financial firms of Wall Street and so forth. So these people were super inspiring. And as I talked to them, I kept thinking like, we need to hear more of these stories, because I think part of what people think I know it's not uncommon when people think about hiring a financial advisor, they'll be like, oh, you mean like someone who works at Merrill Lynch or Wells Fargo or Edward Jones or whatever? And I'm like, no. Actually, the polar opposite, everything not those things, right? The RA community is cool. Like you can find advisors that, I talked to an advisor recently, and I won't say their name to spare anybody like hounding them or something, but they're building a firm that the entire firm, everything about it is all based on vegan principles, right? So not just vegan, like, like life, like
diet, right?
But like actually like same principles that would govern those, but in your investing, in your financial life, in your financial planning life. And the founder is amazing and super smart and super talented and awesome. And she's incredible. And I can't wait for the whole world to kind of like see that firm when it launches here soon. But that would never have been possible, right? Like at a lot of places, it's very much possible at Altruist. And I think people need to understand, like, if there's something you're really passionate about, there's probably an advisor out there that can help you marry like your passion with some really purposeful financial decisions. When we started the idea of human advisor, the other thing that was very obvious to me was like this idea of like wealth gaps, right? Like, how do we make it to where people feel comfortable? Like, again, I use my son as an example. He had no problem reaching out to his dad and asking for some help. Like, most people don't have that. So how do we make it to where there's all these advisors, they look just like you, right? Like they are the same color, they have the same orientation, they have the same values, they're the same age, right? Like they don't have to be wearing like stuffy suits. They could have like backwards hats and chains and whatever. Like, who cares, right? Like the world is I think finally allowing people to have that individuality and have it be okay. Finance is typically really late to embrace like anything.
Right.
But this is something that has to happen really soon so that people can get access to those advisors sooner. So we started the Human Advisor. It was very much an idea to tell the stories of advisors that had like really interesting backstories that led them to decide to passionately serve a specific group of clients. And it's very much not like usually the people or the type of clients that we would always expect when we think of finance, broadly speaking. And it's been a ton of fun. So we've done episodes all over the country. We have like the most awesome hosts. So shout outs to Tyrone Ross, who's our first host, to Sarte Arnway, who hosts now. Awesome, incredible, talented people. And then like just again, like probably 50 plus advisors now that have been really willing to like let us ask them vulnerable questions about their backstories beyond just like their financial planning, kind of practice. So that way, hopefully, people as they think about like, is there an advisor out there? Of course there is. Like, and a lot of those people, they are really happy to meet new clients, and so it's a really great way for them to kind of have more exposure too. So it's been a win-win. It's been like really helpful for us to get an idea about what matters to our users, but it also gives our users a way to kind of connect with potential clients. It's been really cool.
Yeah, and I can attest, I went on a deep rabbit hole and looked through some of the reviews on the podcast that are very positive, and seems like people have been really moved and inspired by some of those stories that you're amplifying. So obviously, as a fellow podcaster, we love just that idea generally of amplifying new and different voices, to your point, that you might not expect. So you're creating an incredible community. We've talked a lot about sort of the RIA community. I want to talk about other members of your community, which is your investor community, because I'd be remiss not to ask you about your fundraising journey. You have some incredible advocates behind you. We talked about Bill McNabb, who's been obviously a past guest on our podcast and is probably still in earshot. So I'll ask some high level and easy questions, but would love to know just what you've learned about the fundraising journey, and then secondly, what's sort of the best advice that you've gotten from the board that you've built?
Yeah, so our investors and our board are awesome. So Bill McNabb's on our board, John Rosenbaum from Insight Partners, and Nick Beim from Venrock. And we're very fortunate to have Ryan Barrows from Vanguard as an observer. So like, this is like the dreamiest group of like people. If you're gonna build the fintech, like you couldn't ask for better people. You've got incredible sort of like SaaS enterprise scale up investors, some of the most important people like in finance, and then some really storied sort of investment firms like Venrock and Insight. So and then there's others too, like that are worth noting. I was going back to the very beginning, so when I started the company, my first call was to Nick Beim at Venrock, and I can say that, not to be overly flattering to Nick, but every founder would be lucky to have someone like him at an early stage. Like The mentorship, it's very lonely sometimes when you're starting an idea. Like today, Altruist has about 180 total team members. And a lot of some people I can bounce ideas off from. But in September of 2018, I had 0. And I needed to find someone that believed in like this idea I had for what was possible as a business. And for those who maybe are watching or listening and they're students, like Altruist is actually an incredible business. So I should say that investors, when they look at what we're doing, that recipe of like challenge, again, going it's like 2 major incumbents that are $100 billion companies is also incredibly opportunistic. We're talking like super antiquated technology, largely a mostly unhappy like customer base with very few other options, very, very big moat around the space. Like this is a good space. If you have the right investors who are willing to think big, they're going to rally behind ideas like this. So absolutely, like we can build a monumentally large, successful business. Like the economics very much support that. In terms of advice, so like hands down, most important advice anybody's ever going to get, I think, when starting a company is the people you surround yourself with. If your idea is big and you are lucky enough to find some early product market fit before you've had to build the business, which was kind of our case, then in order for it to scale and be successful, you have to have amazing people. And our people quotient was very simple. I said, okay, like I've got to have like a framework. I can't help like the engineer in me like needing checks and balances. So it was, let's find people that are kind. I'm from the Midwest. It's in my nature, like I just don't like being around mean people. So everyone had to have like a really high kindness quotient, which basically means like they treat other people the way that they should be treated.
Right.
We don't have like any room for really arrogant jerks, I guess, so to speak. The next was brilliance, but we define brilliance with like more like this desire to constantly get better, and that usually means that you're very humble. So we have some people that are extraordinarily smart, bright, like academically incredibly accomplished, professionally incredibly accomplished, but it's weird. You could sit and spend hours with them and they'd never talk about themselves because they're constantly just trying to learn and get better, like just always kind of yearning for kind of that idea of mastery in kind of their domain. And then last was grit. Look, we're a startup. This stuff is hard. Early on in the journey, I was on a panel and people were talking about building apps, and someone was like, oh yeah, you can build an app for blah, 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 $1 million or something. And I'm like, that's like the dumbest thing I've ever heard. Like this stuff is really, really hard. And I think I dropped my first like public F-bomb like in that stage that day. But because it's really, really hard. And like you have to have people that love doing hard stuff. If it was easy, then there would already be 50 companies in this space doing exactly
Absolutely.
what we're doing.
Yeah.
So we had to have people that were willing to look at this and be like, putting a rocket, with whatever 6 civilians in space is really hard. And then having it like land itself, like safely, like on Earth, like that's. But people who think that way, right? So like,
And are up for the challenge.
Absolutely, and like in fact, they would not want to do something if it wasn't going to be hard.
Right.
And so very much on the early on, like I was very fortunate. I was able to like just build great people, and then the great people attract more great people. And so it's been a really, really, humbling experience. But I will say that there's at least 170 of our 180 people who are way smarter than I am. And like I think as a founder or even as a manager, go always get people better than you are. Like, I mean, your company's going
Right.
to do much better if you do that. If you have fear and you're always trying to index like someone who you can manage, because they're just not as, that's a great way to be stuck, right?
Right.
And to stay as a, kind of low velocity company. So our funding rounds was, $8.5 million when we started, which we were very fortunate. I remember the conversation with Nick. He says, hey, it sounds like a really big idea. How much do you think you'll need? I said, I think $4 million. He said, maybe we should raise 6, and we raised 8.5. And then it turns out, obviously, we had to raise a lot more. So raised another $58 million since then. Our last round was led by Insight Partners, and that was just a few months ago. And so we've been, again, like really fortunate. I think the business itself has to be desirable, or investors won't back it. Like this idea that like, oh, it's so easy to raise money now, crappy ideas. Look, there are some bad ideas that get funded for sure, and there's some wildly bad valuations happening. But I think that rather than assume that it's easy and everybody get funded, like go have a great idea, build an amazing team, take early product market fit, achieve some level of like really rapid early growth, And that's then when you can raise the larger rounds, really then accelerate like the business. And that's kind of where we are today, is that really fun hyper acceleration stage, largely made possible by having access to great capital partners, both the money, but the people. I mean, like, it's, again, a huge advantage to be able to call people like Bill or John, or even like, some of our investors I didn't name that are like highly respected people in the industry, Ron Carson and Steve Lockshin. There's just some really valuable people who've seen what we're doing, and they realize this could be really important, and they want to help. So every entrepreneur should be trying to build great people, obviously, but yeah, capital partners are also part of that people.
Yeah, absolutely. I mean, that's the playbook. I hope listeners are taking notes and sort of following that advice step by step. So we're at basically the bottom of the hour. I have 40 seconds left with you. I'm going to ask you 4 questions. So you do the math on how many words you can fit into 10-second answers. So, all right, quick fire round. 1, were there any other names that you considered naming the Altruist company? I know we were talking about names earlier. And what was the worst one, if any?
No, this was it, and I was willing to pay any dollar amount to get it. It cost me $25,000 to buy altruist.com.
Love that. Okay, moving swiftly on. I think this is fair game because you linked this article on your own personal website, but you did get some accolades a few years ago about not shaving, not showering, and not commuting while you were building Formula Folios, and it was skyrocketing. Have any of those habits stayed? Do you have new time hacks?
Yeah, so this was pre-pandemic. I was just I was like ahead of the field, but look, I'm obsessed with efficiency, and so if something is not efficient, I don't do it. And there's a lot of things that people are learning now, like, wow, we can be way more productive if we don't waste all of our time doing all this other nonsense. Right. So I've tried a bunch of other weird stuff, but those things still stick.
Love that. I mean, I think the key word of this episode is efficiency. So 2 more. FinTech, big space. You have talked about a lot of interesting people that you get to work with and you have the pleasure of working with. Who's someone that you admire in FinTech that maybe you don't feel like is well known, that you wish more people knew about?
Wow. Well, I had the pleasure of meeting the Brex founders last week. They are incredibly brilliant. And
Henrik's been on the podcast, so
these
we're
guys
familiar.
Are incredible. And they were introduced to me by Samir Vesaveda, who is a company called Vise, which is doing some interesting things with AI and asset management. Just celebrated his 21st birthday, so happy birthday.
Happy birthday.
So
we'll give him a tweet, shout out.
Yeah, look, I only wish that someone would recognize me when I was at those ages, but these people are young, brilliant, they're going to do amazing things.
Amazing. And then finally, to cap us off, finish the end of this sentence for me. I will consider financial advice solved in this country when?
When everybody has access to a real human personal financial advisor.
I don't think we could have ended it on a better note. So thank you so much, Jason, for your time. This has been incredible. So much good content, a lot of words of wisdom. We wish you all the best, and we'll certainly be following along in the journey. So thanks for being here.
Thank you very much.